welcome you all to Next Campuses study help as well as assistance for the subject managing financial performance. Now, managing financial performance is a subject that discuss about the accounting, financial record keeping, accounting, and its aids, its helps for performance evaluation of a business. How accounting, financial record keeping will help an organization for performance evaluation of it. So I am Nilendra Vitanage, your facilitator. So in this program, we will be going through slides as well as lecture delivery, where your doubts, everything will be cleared. And if you have any doubt, please feel free to talk with us. So we'll move on. So after learning this particular area, you will be able to have these information and knowledge in your mind. You will be able to identify, understand, and critically evaluate financial and narrative information that will be useful for a business. You will be able to evaluate financial information in a business. How financial information, the record keeping, accounting, and that particular information you will be able to evaluate. And you will gain knowledge and skills to apply accounting techniques for decision making. Accounting, a financial record keeping method, and it has different techniques. So after this, you will be learning, you will have a knowledge on how to apply those techniques in day-to-day decision making. Then you will be able to understand budgets, forecasts, things like that in the financial planning. How budgets and forecast. Forecast for budgets means how you predict for the future, the income, expenditure, assets and liabilities, how you predict for the future and how you use that for financial planning. And you will be able to understand long-term corporate investments and financing concepts. How you can put money into a business, how make investments, and how you do financing. So this particular subject, this particular area will focus on accounting and the uses of accounting for your study purposes. Okay, so now we will have a proper opening to our subject and we will try to define what's accounting. We will try to identify what's meant by accounting. What is the meaning of accounting? Now, accounting is a method of record keeping. It's a it's a mode of recording financial transactions. Mode of financial record keeping. How you record your transactions which are made from money. That's accounting. Record keeping. Accounting is a record keeping process. And why you keep records? Why you make those record keeping? The purpose of financial record keeping, the purpose of accounting, in another word, is for the users of those accounts and financial records to make informed decisions. So through the use of financial records, the users of financial statements, accounts, make decisions. Example, a business will record its financial transactions like sales, cash payments for expenditure. Business will record them. What will happen after the business prepares the accounts? The management of the business or the shareholders of the business who are the users of financial statements, make business decisions based on those financial statements. So, what is accounting? The, the definition, the expanded definition is, it's a process of identifying, measuring, and communicating information to perform informed judgments and decisions by the users of the information. Accounting is a generic name for calculative knowledge system. So once again I am repeating, accounting is a process of identifying, measuring, and communicating information to perform what? To perform informed decisions and judgments. Identifying, measuring, communicating information to make decisions. So the definition, if you summarize, definition is, accounting is a process, an activity of record keeping for the purpose of users of financial statements to make informed decisions and judgments. Example, the sales, purchases, cash payments recorded by a business in accounts will be used by the managers or maybe the shareholders for the purpose of decision making. That's the example that I can give you. So remember the definition, because this definition will be useful for you in future as well. So after learning the definition of accounting and what accounting is, it is the process of record keeping for the people, the users, to make informed decisions and judgments. So that's accounting. So now we will learn what are the disciplines coming under accounting. So accounting as a means of financial record keeping, recording financial transactions, accounting will evolve, accounting evolve into some other disciplines as well. When we say accounting, with the accounting and financial record keeping, some other disciplines will come into our mind. The first one is the basic financial record keeping. We call it financial accounting. Basic financial record keeping, we call it financial accounting. And the second one, cost and management accounting. That's record keeping, financial record keeping for the purpose of decision making to the management of the business. So cost and management accounting means financial record keeping for the purpose of decision making to be done by the management of the business. So in another slide we will be learning what are the differences between financial and cost accounting, the management accounting, but for the time being, keep in mind the second aspect of accounting is cost and management accounting. That's recording for the purpose of decisions to be made by the management of the business. The third one, financial management. Financial management is how funding will be obtained to the business, how funds will be obtained, let's say from shareholders, from bank loans, from other loan sources, how money will be obtained and how it will be invested. We call that financial management. For that financial management, for the funding as well as investments, we need accounting as a method of record keeping. Auditing. Now, accounts will be prepared, financial transactions will be recorded, but someone should be there as an auditor, an outside external party or an internal auditor who is an employee of the business. Auditor to evaluate the financial statements to understand whether there are any misstatements in them, whether there are any frauds, whether there are any errors, and to see whether financial transactions are recorded as per the accounting standards. To do that checking, to do that evaluation, to do that investigation part, there should be a person called auditor. So financial accounting has another aspect which is known as auditing. Express an opinion on the financial statements, whether they have any misstatements, fraud or error, and whether they have been prepared in accordance with accounting standards. That's called auditing. Then record keeping, accounting. Financial record keeping will facilitate another discipline which is known as taxation. The government, the tax department, whatever the revenue collection authority of the country, the tax department will use the accounts, financial records prepared by the business for the purpose of calculation of the taxes and to evaluate whether the business is paying proper taxes. For taxation purpose also, we need accounts. So, accountancy evolves, provides some more branches into it. Financial accounting, cost and management accounting, financial management, auditing, and taxation. Well, now we will look at how accounting as financial record keeping evolved. Right now, we learned that accounting is the record keeping, analyzing, recording of financial transactions for the users of financial statements to make decisions. So, how does that start? Now, the known history of accounting, that means a recording of financial transactions, started from way back somewhere around 2000 to 2500 BC from ancient Babylonians. Ancient Babylonians recorded their agriculture transactions in clay palettes, right? They recorded their agricultural transactions in clay palettes. So the the starting point of financial record keeping and accounting dates back to ancient Babylonians somewhere around 2000 to 2500 BC. Then the recent history of modern accounting, modern financial recording started with someone called Father Pacioli. We call him Luca Pacioli from Italy. Luca Pacioli, somewhere around 1494, uh, he's being known as the father of accounting. Uh, he is the one who has developed the more important accounting fundamental called double entry accounting system. That means, once again I'm repeating, father of accounting Luca Pacioli from Italy started the modern accounting where double entry bookkeeping, double entry bookkeeping started with him, double entry bookkeeping. Now, if I give you an example of double entry bookkeeping, it happens like this. Now, Father Pacioli, Luca Pacioli, said every transaction when you record them in financial statements in your books of accounts, there will be two impacts. For any financial transactions, there will be two impacts. So you have to record those both the impacts in your books. Now, if I give you an example, we will learn them in a more important manner in our next topics, next weeks. But as an example, if you purchase raw materials for cash, right? You pay cash and you purchase raw materials. So for that transaction, there are two sides. Number one, you are purchasing raw materials. On the other hand, you will be spending your cash. So this will be recorded in two accounts. One, the purchasing will be recorded in the debit side of the purchase account, and cash payment will be recorded on the credit side of the cash account, cash book. So that's the double entry bookkeeping. If I give you another example, uh, if you, let's say, sell on cash, sell on cash, that will be uh, sales will be going as the credit of your sales account, and cash coming in will be debit to your cash account. We will learn them in what is debit, credit and everything, but for the time being, understand double entry bookkeeping is recording two aspects of a transaction in two accounts, two books, which is pioneered by Luca Pacioli, Italian, in 1494. He is known as the father of accounting. So, uh, father of accounting, Luca Pacioli, introduced that. Now, we will see how accounting has evolved over the years. Now, accounting, financial record keeping, came directly from the development of industrial revolution. Now, the capitalist world coming from Adam Smith and the industrial revolution has gave the much needed input for accounting to be developed. Now, the development of large scale capital enterprises, large scale businesses like Standard Oil, Ford Motor Company, development of them has helped accounting to develop as a profession. Now, each and every organization which was developed in the era of industrial revolution needed financial accounting for them, for the users such as the management, to the shareholders, to the bankers, to make decisions. And also, UK, the United Kingdom, has helped the accounting profession to be developed into this way. Now, UK has developed accounting standards, then auditing standards. All these has developed accounting to today's world. So, industrial revolution, capitalist industries in UK and USA has developed accounting as a profession into this level. So we had a basic overview of what's accounting, right? So we developed a definition, then we identified what are the branches of accounting, like financial management, financial accounting, auditing, management accounting. Then we have identified how accounting was developed over the years to today's terms, from Luca Pacioli, Industrial Revolution, likewise how accounting developed to today.